Hey guys, all content discussed is due diligence gathered with aim at better understanding the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive in. Actually, before we begin with the regular segment of the day, I need to bring up two important topics of discussion, both which are likely to annoy you, so I will be brief and quick. The first one is regarding these alarming messages I have been noticing popping up on Twitter. For some odd reason, there seems to be a growing and profound lack of self-awareness in those influencers with larger followings in the meme stock communities. In their double-digit IQ minds, they have reasoned that our communities are becoming too toxic, with people too angry to hold conversations, and are calling for us all to convene together under the grace of peace and understanding so that we can once again rejoice with one another in whatever dog shit they want you to believe. In other more practical words, influencers are upset that people are mad at them because all the dates and supposed run-ups and MOAs did not take event in the timely manner which they promised. After months of endless clickbait and donations, it's hard to continue moving the goalpost anymore without setting off a round of individuals who question and angrily mock those that clearly think they know so much more than others. Now that reality has become what it is and their predictions and sentiments did not prove correct, these parasitic influencers have switched their roles from one of command to one of unifier. Knowing that I share the same audience, these influencers have begun calling you guys entitled, lazy, uneducated, mean and rude. To a narcissist, the number one lacking personality trait is that of self-awareness, which yields with it a profound lack of accountability, and that's what we are seeing as of late. Because these people cannot be direct and tell you they don't know jack shit, they opt to instead make you the bearer of bad ills onto others. To that I must say this: you are 100% in the right to be angry and to question anyone you want. If you follow me on Twitter, you can even tell I am a bit toxic as well in my approach sometimes. The truth is, you should not be victimized for demanding answers after being lied to. MOAs is impossible to price, impossible to predict and frustratingly hard to understand. In fact, the major thesis and component behind this movement is the fact that there is just so little market transparency that we don't really ever know what is really going on. We hopelessly call for the SEC to take steps to make markets and order executions more transparent so that we can have a better idea of what is going on with our investments. I came across 3 tweets from people with tens of thousands of influencers calling you guys out for toxic behavior when they were the ones that less than a year ago, even as recent as January of this year, they were predicting MOAs, making claims of breaking the shorter Wall Street algorithm, all with a smile on their face to rake up those views. Don't let yourself be abused. These are your investments, and indeed it all comes down to the individual, but you can for sure call them out on lack of accountability, especially when these same people are now pumping up bad cryptos. I guess it must be a good deal to get paid a commission to fool an audience into buying some pumped crypto that is going to zero, but hey, you be the judge of that. The second point I wanted to make is a quick one. The Discord link I have had in my video descriptions has been invalid for as long as weeks. In my single-digit IQ head, I forgot to check that the invitation link was set up correctly. I corrected the link today and you guys should be okay to join the Discord without problems. I kept wondering why I kept getting so many messages asking me for a link when it was so clearly placed in the description, and it turned out that I overlooked its expiration date. We are all squared away now. Also, since I love pumping up my own day trading service that I provide in Discord here on YouTube, take a look at all of my trades from today and yesterday. If you are a day trader and are actively looking for guidance and clear-cut alerts into trade opportunities throughout the day, join the Discord immediately and tag me asking for access to the day trading group, and I will get back to you as soon as possible. With this dramatic novelization of events all said and done, let's now dive into the day. Stocks began sinking in the morning but quickly turned around after some comments by the Bank of England, who we spoke of in great detail yesterday. Bank of England Governor Andrew Bailey urged investors to finish winding up positions that they can't maintain, saying the central bank will halt intervention in the market as planned at the end of the week. Risk sentiment remains fragile after the last 4 days of bearish performance erased $1.6 trillion quicker than Kenny erased a $60,000 worth of my own GME gains. JP Morgan CEO Jamie Dimon recently said that he wouldn't be surprised if the S&P 500 loses another 1/5 of its value, or 20%. As much as I detest this guy, I cannot say that he is wrong because I pretty much stand in the same opinion as he does. I want to talk about housing for a quick moment. The other day I posted a meme on Twitter poking fun at the endless amount of real estate agents and home flippers that you get non-stop on apps like TikTok telling you that it's so easy to make money without experience in that market. They make it seem like making six figures is just as easy as flipping open a laptop and that any and all of the risk you take on will not result in any real financial damage to you because there are always buyers. They must have skipped a beat when the whole global markets went bare, because in a great news publication by Bloomberg, they showed that a significant amount of home flippers got burned by the housing market's sudden slump. This can be attributed to falling demand and rising interest rates, which led these flippers as well as investors into taking losses in many deals. After the absurd boom in the housing market, mortgage rates have doubled since January, crushing buyer demand and depressing values in investors' most favored locations. The housing market is the literal definition of high risk, high reward, and flippers are literally on their knees like Bed Bath & Beyond Wall Street investors, praying to whatever divinity in the sky to just allow them to break even. It's been a huge blow to them, because remember, flippers take on loans that they need to repay. Now with rising interest rates, it makes carrying those costs even greater. Their problems get compounded because just as investors bid prices higher on the way up like we saw in 2020 and 2021, they can just as quickly accelerate the movement downwards. Home flipping activity reached a record at the start of this year, making up 1 in 10 transactions, surpassing the levels in the last bubble. While the share remains elevated, it fell to 8.2% in the second quarter. Conditions have deteriorated more since then. The typical profit margin in August dropped from 30.9% to 25.9% a year earlier. In places like Austin, Texas, flippers lost almost 1%, and in places like San Jose, California, the margin was just 6.5% after topping a massive 45% in just March of this year. One important way to view this situation is by accessing the effect that large amount of housing flippers have on a market. Flippers power wild swings in prices. They push them skyward when mortgage rates are low and force prices back to the core of the earth when the rates go high. Of course, it hasn't only been flippers who got burned, but investors as well. Companies that have high exposure to the housing market have been getting absolutely decimated in the stock market. You see corporate media shills telling people to buy those stocks, but the reality is that we are nowhere near the bottom yet. The housing market will implode eventually. All we are seeing is its weakening. Don't rush in to buy those stocks. The rich just want you to buy so they can get out and hold cash until the big drops come out next year. Lastly, I want to talk a bit more in detail about the Bank of England ordeal that is taking place as we speak. I know I mentioned it earlier, but I am pretty sure you guys don't know what is happening in detail, so let's fill up the missing parts. The governor for the Bank of England made some statements today, statements that made their entire country panic. Andrew Bailey said that managers have to make sure that their funds are resilient. Earlier in the year, the Bank of England made a fresh bond buying move to calm down markets, and they have been buying bonds to help pension funds at risk of collapsing, but that dream of endless government intervention ended today. Mr. Bailey said that help would stop at the end of the week, and urged pension funds to make sure that riskier investments were offset by less risky ones. In a quote, he told fund managers that they have got 3 days left to get done whatever they have to. As you might imagine, the UK 100 index had a major sell-off, indicating that investors are not confident that in 3 days, fund managers will be able to close out risky positions. This actually aligns perfectly with what I have been saying for months. The United States is working diligently to not cause market panics like the one we are seeing the UK go through. That's why even the mere question of a recession is met by a challenge to define what a recession actually means. The United States' approach to the recession it is experiencing is denial for the sake of maintaining control so that markets decline at an acceptable pace. Anything more than that and it's abrupt chaos, markets sink and the rest of the world falls as well, and we have to begin from scratch. Aside from these couple of things, not a lot took place today worth of discussion. I have a video I am making on Russia, but you will have to give me a couple of days to put it up since I am still collecting information. I saw a couple of people asking me how long I plan on making YouTube content. Guys, I am not leaving until GameStop crashes down to zero and goes out of business, or until we moon. I am in this 100%. There may be times, whether it's a week or a month, where I might disappear in order to take a break. Making videos is a lot harder than people imagine, and ICNR edibly taxing. The thing is, I am very passionate and proud of what I do and always find myself thinking of stuff I want to discuss with you guys. So no, I am not leaving anytime. I will be here for months and years if that's what it takes. I love making videos, as much of a pain it is, until I get rich or my GameStop investment goes broke, so relax a bit and know that I am not going anywhere. I hope you guys had a fantastic day and I hope to see you guys on the next one. Come join my Discord, it has tons of rooms for conversations pertaining AMC, GameStop, day trades and general talk. It's a great server with over 8,000 members. With that said, have a great rest of your day and to the moon.